Good morning, everyone. I'm Vince Lancy. Today, we're going to discuss why the dollar must drop and gold must continue to rise under Trump 2.0. We also are going to include for premium subscribers more in-depth excerpts from the recent UBS gold comments post-election. Basically, it's going to be in full at the bottom for you. Let's start with the markets. The dollar is down 2. I'll let you look at the gold chart there while we're doing this, right? The dollar is down 2. Well, unchanged now, 106.63. 10-year yields are down almost 2 basis points at 439. The S&P 500 is up 10 and change at 59.28. Remember, NVIDIA's earnings came out. They were good, they were bad, but they were all within the range. The VIX is 1670, down 45. Gold is 2664, up 14 and change, off the highs of the evening. Silver is 3103, up 19, holding closer to the highs, I believe. Copper is 411 and change, down a penny and a half. WTI is 70.45, up 110. Natural gas is 319, up 10. Okay. I haven't been focused on natural gas. Natural gas has been strong because of the Russia-Ukraine thing. More than oil, natural gas is disrupted. I can't believe I just spaced on that. Bitcoin, 97,500. A stone's throw, half of a God candle to 100,000. I hope Yellow is ready for a vacation. Ethereum, 3,300, up 7%. I guess there's going to be an Ethereum spot ETF announcement soon. Palladium is up $2, 1025. Platinum is 959, down $2. Gold, silver is basically unchanged. And grains, 992, unchanged for soybeans, 424, unchanged for corn, and up a penny and a half, 571 in wheat, which is also the geopolitical commodity right now with Russia. Russia's wheat, Europe's wheat. Europe's output of wheat is weak. Russia's is more important. And there you have it. And that's the world. Wheat is the world right now. It just is. Okay, so let me find where I'm supposed to be here. There's the front page. We did a post a couple days ago. Fort Knox holds nothing but moths and IOUs. And we put some more material in that and posted a version of it on Zero Hedge. Well, there you have it. We threw in some Zoltan Pozar. We connected some dots there. Anyway, so that's unlocked. Special Trump's return is the death of globalism. We're going to touch on that in context of this whole conversation that I'd like to have today. All right. Next, the discussion. I don't have any charts today. I'm trying to do this in one take. Yesterday, we put out a report, and I mentioned that in the death of globalism. T.S. Lombard, we broke down a report yesterday on Trump 2.0 and the death of globalism. It anticipates a recalibration of monetary policy. They do, that report, to align with Trump 2.0's administration's focus on production and trade, exporting. Trump's influence on the Federal Reserve is expected to push for a weaker dollar, reverting decades of strong dollar advocacy that began during Reagan's tenure, we wrote. As the authors point out, quote, the Hamiltonian era of global banking dominance is over, globalism, and the Fed will adjust to the new reality of economic priorities, meaning they bet the Fed will ease. Very subtle, very nicely said there. Okay, so here's a longer quote from that report from them, from Stephen Blitz and Grace Fenn. Make no mistake, there will be consequences, unintended and not, from rupturing the settled global flow of goods and capital, from which the world has greatly benefited since the 1970s ended. Taking this rupture to heart and Trump's likely pressure on Fed policy to bring it on side, including a weaker dollar, means the late 1960s as analog today is becoming more evident. That's such a great statement. And I want to build on that from the perspective that I have, Goldfix readers have, and viewers have, uh, to try and flesh that out a little bit for you. So let's go. All right. So I already read that. I already read that part there. So let's go. The bottom line and all that stuff there that T.S. Lombard said, and what I'm about to say and what I'm about to spell out, hopefully in a way that we can all understand and feel, is that the dollar has to go down for Trump 2.0 in order for him to get his way, and we need him to get his way. Okay, so here we go down the path. First of all, my background is working class, like real working class, not suburban working class, working class. And so as a kid, I experienced these things and then learned about them in college. So that's why there's a connection for me to make these. This is an academic trying to be disseminated to the plebs. This is a pleb who's like, oh, that's how you screwed us last time. Okay, so here we go. Number one, nobody trusts us anyway. Nobody trusts us now, I should say. Let me get to my notes here. That means no one will lend anybody money anymore. Not just us. Nobody will buy our bonds, number two, at current rates. We see that, right? That the result of which is higher rates to borrow or lower standards of living, and we do without. You buy less stuff. No different than a teenager who's overspending. Number three, no credit means all deals must be done cash only. Now, if credit is no good, all business must be settled in 30 days, internationally speaking, right? If there's no more credit cards, then there's only cash on the barrelhead or 30-day settlements, which is, by the way, when I say current accounting, or anyone like a Luke Groman who talks about current accounting a lot, says current accounting, you're talking about 30-day settlement. We're talking about an American Express card. You have to pay it off in full in a month. Number four, no credit also means no use for our bonds. There is no use for our bonds in trade. Now, I'm taking it to an extreme so you can see this here. If they're not lending us money, they're not buying our bonds. And they used to use our bonds as collateral for trade. See, bonds and the dollar, just a beautiful little marriage there. You see, they hold our bonds as a store of value instead of gold. And the bonds throw off dollars. They give birth to dollars, which they use to buy stuff. Okay, so if you don't have a way as a nation, if you're like, I'm not going to put my money in treasuries anymore and save with treasuries or CDs, depending on how you look at it, right? What I'm going to do is I'm going to find something that's neutral that we can all agree on, that if I ever have to, I can pay them in it. We need a new store of value. The next dot to connect all these, the next number, we need to make and sell actual stuff to pay down our debt. Your teenager, her credit's no good for you anymore, or his credit. We don't want to offend anyone, right? Credit's no good for her anymore. You say to them, go out and get a job. You owe me money for this iPhone I just bought you. Go out and get a job. Create value. Sell lemonade. I don't care what you do. Just earn money by getting people to buy something from you. That means we need to make stuff again and not shuffle money around in finance. Either way, we have to stop spending on stuff, right? The teenager, and start making stuff to earn money back to pay debts to our dads. And that means manufacturing. And that means exports. We need to make stuff. We got to sell it to someone. We need to sell stuff to other people. And that means we enter number six, a new store of value that we trust. Simultaneously, if no more credit, then no more bonds we bought. And that means a better, more reliable store of value must be used that we can all agree on to do future trade. And that's gold, as I just got ahead of myself and said. Number 7, the M word. Gold as a store of value plus export-driven economics, I have to get people to buy my stuff, is mercantilism. And mercantilism means protectionism. Protectionism is a dirty word, especially if you're a capital L libertarian, but protectionism, when you have to survive, is not a dirty word. Okay, if we are to start exporting, we need to protect our domestic industries. We also have to build them up. We need to protect what we have. Therefore, we need to prevent imports from disrupting them if we rebuild. Keeping in mind everything Trump intends and needs to do will be to gear us towards being an exporter nation in this new mercantilistic age. Protectionism, number 9, means tariffs. Tariffs protect domestic industries and jobs. Now, here's where it gets kind of like, oh, crap. Tariffs protect domestic industries and jobs, but they also strengthen the dollar. Okay? Tariffs, therefore, mean, believe it or not, they strengthen the dollar because tariffs will make people buy dollars because they need dollars for global trade. And so it just makes the dollar get stronger, simultaneously weakening all their economies. So tariffs also mean, believe it or not, with a strong dollar, tariffs mean inflation. Tariffs are deflationary outside the US. They can't sell us stuff anymore. It's too expensive. And inflationary in the US. Well, how are they inflationary? Stronger dollar. We can buy stuff with a stronger dollar overseas. They have tariffs too. See, tariffs are bilateral. We can't buy their stuff, right? Our dollar is stronger, but the tariffs go up. So the dollar gets stronger, tariffs go higher. It just goes like that, right? So tariffs, like everything else the government does, will permit domestically based businesses to raise prices to just under what the foreign product is trading for. And that will happen over time, 100%. The BMW costs $50,000. With tariffs, it costs $60,000. Well, the US version of the BMW, whatever it is, whatever, it's a Ford MW, is going to go from $49,000 to $59,000. It's still cheaper. That's how it works. Okay. The problem with tariffs in a global reserve currency is, now going back to the dollar, the problem with tariffs in a global reserve currency is the strong dollar. So we need, right? We need, with these higher tariffs preventing stuff from coming in, we protect our industries, right? Right. So our domestic demand is taking stuff from the industries, right? And now we also need to export things, right? And in order to do that, we need the weaker dollar. And how do you weaken the dollar so that everyone's trading with everyone again? It's domestic inflation and foreign deflation. What we want is domestic inflation to come down and foreign deflation to come down as well. So we weaken the dollar. If we weaken the dollar, then they're more likely to have more dollars to buy more of our stuff. Okay. Put more concisely, the one thing that gets in the way of all this is the US dollar getting stronger due to tariffs will make it very hard to hit our export numbers, right? We're rooting for Trump in this conversation. To counterbalance that, remember, all these tariffs are fiscal, right? We need monetary policy to soften the dollar's rise and preferably to make it drop. So enter the Fed. That's where the Fed comes in. Fiscal policies enacted by Trump must be met with monetary policies if the plan is to work in rebooting the US as a manufacturing and exporting power. We need a weaker dollar. So now you have tariffs creating inflation for us domestically. Think about this. because companies are like, I mean, call it price gouging. It's not, but call it price gouging if you want to. If you want to be, completely tax and spend Democrat, call it price gouging. It's not. It's basically it's free market. It's the free market. You can't stop a free market, and so prices go up for us over time. Right? You get a $50,000 Ford Pinto that blows up on impact, and we need to weaken the dollar. And weakening the dollar doesn't make us buy stuff overseas because the tariffs are still there. Weakening the dollar makes it easier for them to buy stuff from us, and they all have dollars. Right? They may not have treasuries as many anymore, but they still all have dollars. So if it works, if the Fed reducing the dollar strength while we support our manufacturing, we will have more inflation for a while, possibly a very long while. Remember, T.S. Lombard said it's the 60s. So remember those three inflationary bumps, 60s, 70s, 70s. Maybe we're not in 1975. Maybe we're in 1971. And it could get a lot bigger on the inflationary side. Anyway, we have, as I said before, we have more inflation for a while as we retool our economy to become the monster we need to be to pay down the deficit. All it really means is we're going to go out and get a job as the teenager that's overspent, right? And instead of getting $50 an hour, right, we're going to go out and get a job for $5 an hour and work 10 times as hard. Inflation is just like getting underpaid for the work that you're doing. Same idea. Otherwise, we're done for. So, mercantilistic age. We need to make stuff and get other people to buy it. Tariffs are needed to protect our industry while, if we rebuild, assuming that we're going to do that for a while, we have inflation. And then we have a new economy that's a return to World War II economy, because we're probably in World War III right now, economically, where we're manufacturing and exporting our way out of things. And affluence and wealth will be created for the next generation. So if you were told that we must have inflation now, as I'm saying, in order to retool our economy to become the exporting nations we need to be, to avoid global, I'm looking at my notes now, to avoiding global war, and you were a patriot, you'd say, if you were talked to like an adult, which you're never going to be, except maybe for here once in a while, if you were talked to like an adult and said, we must sacrifice now for the future, you might say, shit, I can handle it, go for it, right? But we can't tell the boomers that. Not because they won't do it. Most of them won't do it. I know this. Most of them would do it. But we need them to vote for us to get elected. And that's why it never happens. So how do we minimize the damage, knowing that the government's never going to be straight with us, but they're going to continue to do the things that I just outlined here? Well, you do what the Chinese are doing. You do what the BRICS are doing. You buy gold and silver. Yeah, that's what you have to do. Now, if you hate the US and you want it to fail, right? You're a doomer, right? We're all doomers once in a while, right? Then buy gold and silver. Because if we don't do the above stuff successfully, then we will be a third world banana republic selling natural resources to China and building factories that make little plastic dolls and selling them to Saudi Arabians because they will have all the wealth. We'll be running sweatshops. So that's what Trump needs to do. Yada, yada, yada. There you have it. News and analysis. That's all the stuff we put out yesterday. UBS joins Goldman in forecasting gold's rally isn't over. That's a Bloomberg story. It's almost like they're reading what we wrote. UBS says, wake up the neighbors on gold. Founders, Tech Gold, and the dollar post-inauguration. Really, really good macro analysis. The zero hedge edit I just mentioned. Moving a little bit faster. Market news. Amazon killed Target. This story that I want to just comment quickly on here and give a shout out to a GoldFix founder. Two of them actually from different points of view. One is a retail hedge fund manager and the other one is a real estate manager. Target's and Walmart's quarterly results underscore how the two big box retailers' performances have diverged. That's true. That was determined 6 years ago, 7 years ago, when Amazon launched online. Walmart said, oh shit, and they created their online presence. Target said, right? So now here we are 7 years later, and Walmart has survived and has excelled and is basically the number two next to Amazon. And Target, nobody goes out to buy anymore, right? If you don't have any money, you're at home ordering online from Walmart or Amazon. So Target's done, right? This was foretold by a Goldfix founder named Richard 7 years ago, when he said, oh, Amazon's going to kill everyone but Walmart. And I said, why? Not my business. He goes, because Walmart sees that they need to have an online presence. And they're doing it. They're protecting their customer base. He goes, the rest of them, they're done for. Another guy, the other guy is, I'm not going to say his name. He's a real estate person, and he was looking at the real estate centered around this. He made the same comments. Anyway, data on deck, housing and talking, existing home sales, premium. That's the UBS thing. Let's look at the markets. I want to, sorry, my dog is grumbling in the background. Remember the 100-day hold, the rally, and we're at the 50-day. I think, right, the fish hook, we got the fish hook. Surprised the shit out of me, to be honest with you. If we get above the 50-day and it increases its slope upward, which it looks like it would, you can just extrapolate a day or two in advance to figure that out. You're probably going to run through this area. I don't know that you will, but you probably could, which brings us to silver. If you're a technician, you're seeing this as well, right? In silver, we're not near the 50-day. So everyone will, my dog's barking, everyone will continue, everyone that's purely technical will continue to short silver, especially if the 50-day turns down. So the question is, who wins? The sellers of silver or the buyers of gold? Well, if the buyers of gold win, one day you just wake up and silver just tears the faces off of everyone, 5% higher, 10% higher. And if gold doesn't rally, you will see silver crack the 100-day. And that's it. If you're bullish gold, buy silver, but be patient. If you're bearish gold, sell silver. And that's it for today. Have a great day.